Welcome to the Money Collective podcast. We're here to uplift your financial well-being. Your hosts are me, Mel Pierce, and Darlene Yu. We are the co-founders of the Money Collective, and together we have over 50 years of finance and banking experience. We provide the tools, information, and guidance to better understand your money and feel confident making money decisions.
We are here for another episode of uplifting your financial well-being with the Money Collective.
That is us.
Okay, let's start with a truth today. My truth is planning for a holiday. Okay. So I've learnt so much from listening to Mel's planning that I feel I've really, she set a high bar, right? So I'm like getting a little nervous, but I need to really get started. So
I can't wait to see your spreadsheet.
Maybe I'll need to copy yours. So back in COVID times, my daughter Lily said to us, "Mum, I really want to go to Europe." And I suppose that was a bit heightened because we were locked in our houses. So, and I said to her, "Yes, we'll do it in grade 8.
Okay.
It wasn't even a maybe. It was, yep, we're going to do that when you're in grade 8. That's a good time. Now, I probably just plucked that out of my backside. But there was, some rational thought in there that, grade 8's a good age, people worry about taking kids out of school, and I think, grade 8's not too bad, and what like the life stuff they're going to see and learn is so much better than what you're going to learn at school anyway. So I am thinking that we're going to take a holiday to Europe for 6 weeks.
Cool.
So that means out of the business, which is scary in itself.
I'll be fine. I'll be fine. I won't break
more than
anything.
fine. No, I'm not worried about that. Actually, more than fine. But there's always a lot of stuff to do, so it means Mel's got to carry more of the load. But also I've got to do the budget. I haven't even started yet. I don't know what it's going to cost. That makes me really nervous because I don't know
Whatever
my numbers.
you think times 2.
And I want it to be a really good trip. My money personality is risk taker saver, right? But sometimes what can happen is I can trade off quality time now. And I work a lot, and sometimes, I have guilt around not being there for kids and stuff like that. So I really want to be in the moment, enjoy that holiday, spend time with Lily, and I've got a 23-year-old son, Logan, I've talked about many times. How could I go without him? And obviously Dennis, my husband. So we've invited him along.
Dennis gets to go too.
Yeah.
That's good.
He does. So it's the 4 of us. So it's our whole family, like our family unit, going to Europe. And Logan said, well, if you're paying, I'm there. So I didn't know whether he'd be in or not, but I really want him there for me because I can create these memories. I've got this vision of all the memories we can create. So definitely all in. Now I'm up to doing the costing of it. And I haven't started. My theory is it might need 6 months planning. Is that right? Do you reckon I need to start earlier?
No, you've got this.
Yeah, got this. Look, we do have savings and some money we can draw on, but I'm like,
so you've already got like a plan, like how much money you roughly want to spend, and then you've got to figure out what you can do with that, how far it's going to stretch you.
Yeah, so it's all the planning. So, so I know that's not, much detail in the truth, but planning for a holiday. I need to really start now, understand what it's going to cost, what that's going to do to our goals, where it's coming from, because, it's a trade-off. But it's a trade-off I really want to spend and spend some time building quality memories.
Like knowing how much it's going to cost, setting that money aside and then looking at the future. That's really what it is. Like that's cool, that money's gone, and then the future planning after that. I feel like that's the main impact.
I think that's the future planning. Actually, that is key, actually, in this situation.
Because you might have a number, I don't know how much it's going to cost you, 50 or 60,000.
I'm saying 50, yeah. Off the top of my head, no research done yet. I've said a number in my mind of 50K, but I've got no clue. Yeah. I hope it's... So, yes, but then, exactly like you said, what dip does that make? And what difference does that, that compounding impact make in other places? So that's what I really want to know
Yes. Once that money comes out, what does that future look like? Well, I can't wait to hear what that sounds like.
Yes.
Because what is in the future at the moment that you think off the top of your head is going to be impacted?
Not too much.
What
'Cause
comes to mind?
Yeah, that's a really good question. It would be just money for lifestyle in future years. Because my goal, and I don't know whether I've shared this before, is paying off debt. So
Yes.
I am trying to get debt free. Debt's got its place, people, but for me, I am just really trying to get debt free. So what does it mean? It means that I'm not as debt free as quick as I hope, I guess.
Yes.
Yeah.
But you've got other methods around that because you're selling some properties.
Yeah, so all that's right. So I've got some pieces coming together. I need to put them together. That's exactly
Do you think once you look at it and you go, right, well, there's my plan and my strategy, spending the 50,000 is actually very worthwhile. It's not really going to impact life too much.
Yeah.
Or
yes, it's the opportunity cost loss.
exactly of not doing it.
Because I need to, like, by doing this means that, one of our loans we're not going to pay off as quick as I thought, right?
Okay.
So how much longer do I have to pay that loan repayment so it's out of cash flow?
Yes.
Which means otherwise you could do something with that monthly repayment.
Yes.
So $2,000 or $3,000 a month, maybe I've got to, do that for an extra year or something.
Yeah.
So say it's $40,000.
You're paying off that loan for whatever that time is.
Yeah. That's right. Out of my cash flow, which means you can't do something else with that and it hasn't got compounding impact.
Okay.
So, actually I need to do that. That's really helpful. Maybe it's going to cost me overall $100 grand or something.
Yes.
Yeah. If I look at it like
I
that.
see what you're talking about. Yeah.
Does that make sense?
Yeah. Because you're spending the money and not.
Yeah. So it's not, I'm not planning to retire anytime soon or any of that. So that's when you ask me, it's hard to do it. It's more about just, not reaching my goals as quick as I wanted to. And that's not the end of the world.
No, it's not.
It'll still work out.
Yeah.
Yeah, but I do want to have it planned a bit. I probably won't plan it as detailed as Mel, and have all the bookings and things, but generally, yeah. Yeah, cool.
Very, very good. So that means I have to share something. And, well, my sonny boy turned 18 on the weekend. Very exciting. I now have somebody who...
You're an adult. How does that feel?
Yes, thinks he's an adult. I don't know if he does,
she doesn't think he's an adult.
No, I think he doesn't want to grow up quite just yet. I think he's happy being in that space, and I think it's a bit overwhelming for him, like just to go, bang, I'm here. Because I've seen that in kids before, and I don't think that's him. Like,
do you know what though?
He's loved school.
I think that is the thing. Logan's 23, and I actually think
it's
that he didn't want to, like, how we think, okay, we're a kid, we turn 18, now you're an adult. It's not actually like that.
Yeah.
And I think he's still, before he moved to Sydney, I said to him, it's time to adult.
Yeah.
Because
so interesting.
I think he wasn't really ready, and I don't even know now whether he is. Yeah, it's interesting.
So I've seen him yesterday. He went out and he's bought a toolbox for the back of the ute. He hasn't saved for a car. I've mentioned this in previous episodes, but we've got a really old ute that he'll be driving around. I should have bought him what is it called, a roadside assistance package for his birthday. That probably would have gone well. There's probably going to be a bit of that.
Otherwise, I'll be calling you
guys.
Come
not sure how reliable this vehicle is, but he will be driving it. And you could see those gears and cogs are starting to work. So he bought like a toolbox because he got some tool. That's what his gift was from us for his birthday. Some tools for work because he wants to be a tradie. He wants to start a building apprenticeship. So he's got something lined up, which we're fingers crossed that all works out. And so you can see that he's like wanted to finish school, and the brain cogs are shifting into like, oh, I'm about to start work. Like it's really happening in the moment. And that's really cool to see how, that's all panning out for him. But the only other thing that I wanted to mention is So yeah, I know some people, I think my mum said to me, have you bought him a car? And I'm like, no, we didn't buy him a car. He can sort that out himself.
Yeah.
He needs to motivate. And then I was talking to some of his friends that were over on the weekend celebrating on his birthday before they'd even had too many beers. So I feel like, but enough beers for them to admit this to me, right? So
a bit more relaxed than usual.
Young man said to me what he got. His birthday was the week before, and I can't even remember what he got. He got something, and he told me how much it was worth. Like it was $700, and he obviously was not happy that was only $700 his gift.
Thought it was underdone.
And then he goes, but it was okay because then I also got this other thing. You'll be able to identify yourself if you are listening to my podcast, young man. It was a signed football jumper and some replica medals, and he knew that they were worth $1,300. And he goes, so it was okay because I got that gift, and he could see his brain clicking because that got him to the $2,000 mark, which is now an acceptable gift
for 18.
And I'm like, yeah, I'm there going, oh my God, of course their brains are thinking like this, but literally, like, it matters how much you spend on them. Like,
yeah, they're equating that to what? Love?
Yeah, their value, their self-worth, like, or how they muscle between their friends, like whether their gift was good enough or not.
Ego?
Ugh. So I'm just like puking in my mouth and like inching away from this kid because I didn't know what to say. And he's like really getting into this conversation with me, but I found it awkward. Yeah, like the expectation is your kid going to feel okay with this gift? I feel like we have strong enough money conversations that it's a bit of water for duck's back, I hope, for Willow. But, you know, it all
rubs off,
funny how we just put so much meaning behind all of this.
And value of ourselves. Yeah, I think my thoughts there are really think about conversations or what traits that you're leaving your kids with from the way you behave at home.
Yeah.
And it might not just be from parents, like you said. It could be from all of what's going around that person, you know, from all the situations. But definitely at home has huge influence. So, yeah, that's interesting.
It's very, very interesting. And the fact that we are giving our kid like this ute to drive around, which I reckon is a little bit embarrassing, like for him, but he's like owning it. He's like, well, I haven't, because we keep saying you haven't saved anything. You haven't got a job. Like maybe, I haven't said out loud, maybe would have helped you a little bit if you'd shown a little bit more motivation. I haven't wanted to say that out loud at all, you know, promise anything. All I've said is like, well, you haven't saved, so you haven't got. Yeah. You didn't go and get a job. You haven't got, you know. And like, that's up to you. That's not my responsibility. And he's had to, like, I can see him coming to terms with that over time too, because his friends are all rocking up in cars that their parents have bought them. And they're better than my car.
But I feel that that's a really good message, because the other thing is an incentive to earn and to buy what you want and be in charge of that.
That's
like, I've talked about this lots of times, but we are taking away those feelings that we want as human beings when we've saved towards something and we go and get it, and it's our choice of what we have. Like actually being able to choose, being able to feel good about it, because we, you know, whether it's our sweat and tears that we've had to, you know, give away to do it.
Or we have to
feel purposeful,
and we have to problem solve for ourselves. How am I going to go about this? If I want this, how am I going to do it? Do I have the ability to do it? Of course you've got the ability to do it.
Yeah.
What are the first steps? And that's actually what we're helping him with. Like the first steps, he didn't even know how to book in a driver's test or how to book in some lessons. So we're not even doing those basic things for him, you know. So he's had to make those phone calls, and it's what do I say? We need to uplift them with these basic skills. And it might sound silly, but they have to make the calls. They have to do the things. They have to be able to book in appointments. So I think also, you know, we talk about all around money, but we are sending the messages to our kids when we are doing that. For them.
By accident, but we are saying to them, we don't think you're capable. And we might think we're not, well, we don't have that intention, but that is one of the possibilities is how it's being received.
Yep.
And,
but on the back end of that too, if I gave him money, or we did, and we decided to prioritize that as a financial goal of ours, then that's going to impact our financial goals as well. Do you know what I mean? Like we can't necessarily afford that either.
That's right.
Yeah. So I think we see people do this too. They want to give so much to their kids at the detriment of themselves
all the time.
So you're sending the message to the kid, you're not capable of doing it, I'll solve your problems, but they're not demonstrating that you can solve your own problems.
Isn't that an interesting one? That's right. And
it's
how
like
does
put
the
your
child
own
view
oxygen
you?
mask on first?
Yep. Yes. Well, good luck, Willow. I will see what his journey is.
Oh, he'll be a
so exciting.
Very good worker, and he creates beautiful things.
He will be amazing.
Anyway,
great job. Yeah, excellent. Okay, our topic for today is home loan optimization. So everybody thinks generally, I will put the disclaimer around, with general advice today, not personal advice, seek personal advice for your own situation. But generally what people do is look for interest rates to be the only thing that you can do to pay your home loan off sooner. And we need to refinance, we need to chase the cheapest rates, it's almost like we think it's a one-trick pony, but it's actually one component of many things that you can do to reduce and pay your home loan off sooner. So to begin with, you can pay extra per week.
Oh my God, really?
You could.
That has a massive impact. Like that is the biggest and the one biggest thing that you can ever do with your home loan is pay more off and leave the money in there. And I think too, people go, I can pay the money off and I've got redraw, so like the money comes in, the money comes out, the money goes in, the money goes out. But actually, once you know the numbers of if the money goes in, you pay extra and it stays in, and you see the compounding effect that it has, and you cannot see the compounding effect that will have by looking at your bank account. You never will. It's so subtle, it's so underlying, it happens so slowly at the very beginning of a loan that you don't reap the rewards until later on. You actually need to put those figures into a calculator. You need to go, if I pay an extra $100 a week off my loan forever, I will save $240,000 and 12 years off my loan. I'm making those numbers up. But if you know that it's going to save you 12 years off your loan, bloody hell, like when that year rocks around and you don't have to pay your loan for the next 12 years.
Well, imagine what you can do with the money.
Oh my God.
So you get a double
I think we forget that. We're like, that is huge.
Yeah,
like
amazing.
If we do some hard yards now and pay that loan off quicker and don't keep spending on it, then our life in the future, it's hard to think about the future sometimes, the reality of it.
But it does come around quick. And yeah, it's not just having the money back in your pocket. It's having that money you can do something else with.
Yes.
That I think we forget about. Like it's just, we're paying it off. But it means you can actually do, like you think if your mortgage is between, I don't know, $2,000 and $4,000 a month maybe, then that's extra money.
And that's where you need to really think about it in those real terms. Because like if you set a goal that's I want to be debt free, like what you said earlier, like to me that's like blah blah debt free. What does it actually mean?
Why?
Though? Like why?
That's really
How
good.
much money does that free up?
And what can you do with it?
If your mortgage is $4,000 a month, $4,000 a month, and you all of a sudden get to stop paying $4,000 a month, what are you going to do with that money?
$48,000
a year.
That's a lot of change.
You can just go on a European holiday every year. Hell's bells. If you did some hard yards now, yeah. Or you can like maybe not meet your retirement goals and things like that. Life is going to throw you curveballs. Shit is going to happen. Like we can set these plans up, but if you actually do some of these things when the shit happens, you'll be better off for it.
That's right. And understanding how much it really makes a difference today. So say and everybody's in different situations, but if you know your numbers and what it costs to live today and you're prioritising towards some future goals, and this is one of yours, like, you'll get used to not having the $100 a week.
Of course you will. And it's resetting those, like, mindset, what you're willing to, how you want your everyday to look like as well. And that might mean making adjustments.
Yeah.
And it's like the friend thing again too, saying, that's not in my budget. We're not doing that. I've got other financial goals.
It really is.
Saying those things out loud is how you actually change the behaviours, and owning up to it, being honest.
Exactly. I would also say, so think of all those barbecue conversations. I'm not sure whether you've had someone, or people around your barbecue and they say, so I've paid my house off, right?
No, they say to me, I'm investing in crypto.
Oh, crypto. But, I've paid my house off. And everybody wishes they were that person, right?
Yeah.
So, I don't know, if that is a goal, then you've really got to understand the ways and things you can do it. And one is paying a bit extra consistently with a compounding impact. You can save years and years off your loan and save yourself a lot of money.
If it's a true goal, work out those exact numbers. Like, if you know your numbers, how much you've got free in your budget, and then you go, right, well, I want to have a small holiday a year and I've got this much money left over to put in the home loan. It goes in the home loan and it stays in the home loan. Know your number.
Yeah. Absolutely.
Know that you can put $5,000, $20,000, whatever your number is, into the home loan.
Yeah, exactly.
Yeah.
Another thing you can really do is change the frequency of your loan repayments. And I feel like it's old school. We've been doing this a lot, but people seem to not talk about it as often.
Well, can I just say that somebody did last night to me? So I was on a phone call and they said, when you refinance our loan, Mel, we're going to change our repayments from monthly to weekly. And I said, okay. And I did the little calculation for them and I said, that'll save you $700. And they said, I said, in 28 years, that'll save, from changing their repayment from monthly to weekly, will save them one weekly repayment. Yeah.
And were they deflated?
Very deflated. Yes. But then when I said, if you didn't just change to weekly repayments, but you looked at a monthly repayment and divided it by 4 and paid that monthly repayment weekly, then you're making, it was something like you're making $2,000 or $3,000 extra a year on the home loan, and you save a couple of years. You save a couple of years, So that came down to, though, you're making an extra repayment, people.
Yeah, really.
It really is.
Yeah.
Whether you pay weekly, fortnightly or monthly, I don't care. Honestly, you do what works for your budget.
Right. There's a tiny bit of benefit because the way home loans work, it is tiny, but it's because the interest is calculated daily and charged monthly. That's where you get that little bit of benefit, but it really is those extra payments that make the difference. 1 week in 28
years.
Yeah.
Anyway.
Yeah.
But it is knowing those things and how interest is calculated. So that's daily calculation of interest. But what you really want to know is the compounding effect of like paying extra off your loan.
Yeah.
And knowing how much you can afford.
Yeah.
The interest rate matters as well.
It does. So, interest rate does matter. The thing is, though, we can't chase interest rates all the time because it costs money to refinance from one bank to another. So it can cost $1,000 to $2,000 to move from one bank to another, and you've got to go through a whole loan process and provide all your information and then do, and leave banks. But
so you don't want to be left out of the market on your interest rate though. So if you ignore your interest rate, then you could be paying up to 1% higher than what you need to be. Like that would be absurd.
Yes.
But like
it happens. We see it all the time.
Yeah. So you want to know what your interest rate is. You want to know what you could possibly get in the market and make sure you're keeping them on their toes.
Yep.
And getting the best that you can get, at least annually doing that.
That's right. And you need to do the math. Coming back to knowing your numbers. So you can get an interest rate that's 0.5% better. By the time you take off the cost to refinance, is it still going to be in my interests?
Yes.
And it also depends on your personal circumstances, whether or not you're trying to reduce your repayment or you also want to reduce pay your loan off sooner.
That's right.
You know?
Because if you're making your minimum repayment fine, you get a cheaper interest rate. Don't pay less.
Yes.
Just keep paying at the same amount. And you know how rates went down? Like we were paying like 4.5%, 5%, and then it went down to like 2%. You know,
if you'd have kept paying that same repayment,
we were like in this happy place going, woohoo, life's so good, we can afford everything we want, have what we want, kids, you know.
Oops. But that's what we all do, right?
That's like what the world wants you to do too, you know.
Of course it does. That they want you to spend more money, you know, make business go round, make life go round.
But if you ever get that a windfall or rates come down, because we're expecting rates to come down next year, like in 2025, we're thinking rates are going to start coming down at some stage. If you can afford keeping your current repayment exactly where it is, or working out if you can pay more, do that, people.
Definitely. Try and build those habits and mindsets of even now what you're going to do when interest rates come down.
Yes.
Actually start to plan, and then it happens rather than just flying by the change.
Because if you've just signed the direct debit tick form for your home loan, so the bank just takes it out via direct debit, they will take the minimum amount. They don't want you to pay. No. It's a little in-house secret. They don't want you to pay your home loan off.
That's why they don't just offer cheaper rates when they do. You've got to ask for them.
You do. You have to ask.
They are happy for you to keep paying.
Don't
make money.
Don't assume that the bank is working in your favour and looking after you. They are not. They are looking after themselves, and they make the most amount of money off you in their home loan space.
That's why they keep offering you credit cards and things like that, which we're not talking about today. But they're making interest. They're making money. That's how they.
You need to be in the driver's seat when it comes to your home loan, not the bank. Yep.
So you need to understand how it works. You need to definitely get onto our website and look at a repayment calculator. And in good repayment calculators, there's something called an amortization table, which is sort of what Mel was talking about before. And you can look at it, and if you pay whatever minimum repayment, it'll tell you how much is going towards interest and how much is going towards principal. And you can predict what your balance is going to be at any moment in time. So if you could say, okay, in 2 years' time, I want to know what my balance will be because something might be changing, you can actually see what that balance would be. And then you could say, you could put into that same calculator, if I pay an extra $100 a week, what would my balance be in 2 years' time? And if you think about back to the interest rate thing, if people had paid extra when interest rates were low, their balance would have been much lower when interest rates went up, which means you're paying interest on a lower balance. So you're actually...
Your money's going further. Every
Yeah.
single time you make a repayment, you're paying less interest.
And your repayments wouldn't go up as much.
More principal. That's
right. So it's really important to understand. And look, we need to have a roof over our head. So if we have got a home loan doing that, it's really important that you're optimizing it because it's normally one of your biggest expenses, right? That or rent, that and your food are your biggest expenses generally. Yeah. So you need to make sure that you are managing it proactively really well.
Yes.
And understanding it, reviewing regularly with interest rates. Am I in the market? Looking at, can I pay extra? And you can do that different ways. And we haven't talked about offset and redraw. So depending on how you budget in your systems and what your bank offers, redraws when you pay extra off your loan, and we've sort of touched on that. But offset accounts do the same thing, but your money sits in separate bank accounts. And you can really set up good budgeting structures using offset accounts. So every dollar every day is reducing how much interest you pay. So they're the things you need to do, and really forward plan and what balances could look like if interest rates, stay the same or are different.
This is over your head, but it sounds great, but you don't know where to start. Just call us.
Because there is
the
quite
Money
a bit.
Collective, call your mortgage broker if you have one, and set up a loan appointment to do a review.
Yeah,
any good mortgage
that's
broker
right.
is going to do that for you.
That's right. But even in that, go really proactively with the questions you want to know and help understand, get educated on how they work and how I can optimise my home loan.
Yep.
Great.
So, do you have anything else for that? Because I feel like that's our gold. Pay more is my one tip.
Yep.
And leave it in there.
And reap the benefits later.
Yeah.
Reap.
Pay what you can.
Reap.
Yep.
Okay. Great. Okay, so a question for the week.
We just wanted to finish up with something, and it's kind of on this same vein of thought around your home loan and fixed rates coming off, because we still are seeing fixed rates coming off at the moment, and that spike when that happens. So if you're on a lower interest rate, and you might be on 3, 4, or even 5%, and coming on to a 6.5% or 6% interest rate.
I'm seeing a few still in the 2s that are just about to come off, and then you're going from, say, close to 3 or 2.5 to 6% or 6.2 or 3.
Yeah,
that's a lot of difference.
And so people are scared, so they're like, oh my gosh, what's going to happen? And knowing your number, we've spoken about this before, and it's always the same answer. It's like knowing how much it's going to go up to and having a plan for that. And sometimes, like, there's nothing we can do about this. Interest rates have gone up. You are going to have to pay more. There's no magic bullet to relock into another fixed rate at the same rate. It's going to cost you more. And if you took that loan out a couple of years ago when rates were low and times were higher, it might have felt really good and easy. This is a very different environment that we're in right now. And all of a sudden, it's $1,000 a month on average for a lot of people.
Almost a minimum, like going from that, if you're still in that low, or in 2s going to 6, it'll be at least. It'll be more.
Yeah.
Probably.
So where are you going to come up with that $1,000? And look, the last place that we usually want to influence is our income. We really usually want to be working with what we've got in the budget.
Yeah. Optimise your discretionary. Review your budget and your expenses first. But sometimes that might not be enough.
It might not be enough.
Yeah.
And so what we are seeing is people going back. I've had one of my clients, he quit his job and went back self-employed. He was able to earn more money doing that, making that change. And like people going back, returning from maternity leave early.
I've got a customer like that at the moment, and they've actually got an investment property and a home loan, and they've got them both fixed.
Tracked that. I just mentioned maternity leave. I want to call it parental leave. People like 2 people make a baby.
Yes, very true. So coming off that, and there's a whole lot of navigating. So if you've had parental leave for a period of time, and in some respect, this case study is really good because there was a heap of planning that went into that, fixed rates, how much money had to be saved to get through parental leave. And I feel like when people have children, that's really good exercise to do. Great planning to get you through to there. But it's funny how our brain sometimes can only go to a point in time.
Yes.
So it was all about, for this case study, planning for that, making sure we've got enough.
You can't plan for everything.
You can't, right?
And you've got to just keep replanning.
That's right. And so, and it was set to this period of now going back to work, but now it's like the next phase. Okay, now what I've got to do? And then the prediction of 13 interest rate rises, probably wasn't in the mix. So now I've got to understand, understand what that means, and setting, like you said, a whole new for this next part of life.
And just making new decisions. So right way back then, like, you kind of planned for the 13 interest rate rises, but you have like an arsenal of things in your back pocket, which is what we call resilience. So and in this case it was going back to work earlier. Like if I really needed to,
just have to go back to work.
I can go back to work. And there's other things and triggers that we can pull. We don't need to plan them all to the nth degree, but we need to know what they are.
What would I do if?
What would I do if?
Not, like you said, it's not necessarily a prediction of 13 interest rate rises, but there's lots of things in life can throw us. That's why resilience is really important, So you think, well, what would I do if? And it's, in this case, the what I have to do if has come to fruition.
And so I
have to go back to work full time.
Say, having this conversation could be really triggering, and this could make you want to actually give up and go, well, fuck it a little bit. Like, this is all too hard. Like this, I feel shit. I can't even make decisions right now. It could be paralyzing. And I would beseech you, if you're in that space, to get help, like reach out and just mention it to those around you. And if you need professional help, go and get it. You might want to reach out to even a financial counsellor, the National Debt Helpline as well. Just get the help when you need it, and the psychological support as well, because it's all well and good enough for us to say this, that just to do the next thing or whatever, but really
it could be paralysing. You might be in a situation that you just can't think straight, can't do straight.
And I am being very generalist and sexist, saying that men keep a lot of this too, like they might, you know, traditionally the freaking primary income earners or whatever. If you're that person who's like feels so responsible for this, just know that it's a group effort, and that your family and the people around you love you, and the life is way more than money.
Yeah, that's right.
And as a society, we can get through things together.
Everybody, even in a partnership, people want the other person in the relationship actually wants to be a part of it. I have never seen once that they don't want to be a part of it and you just to solve all the problems.
No way.
People want to do that.
Sometimes people don't know how to insert themselves in there, particularly if one person's done all the decision making or feels particularly responsible.
Actually, I definitely see that, where people don't know how to step into it.
And also we don't know how we compare, and this is what we do as humans. We want to compare ourselves to the people around us, and we think that maybe everyone's doing better than what we are. That's not true. It is not true. Like, it is hard slog, this life sometimes, and making ends meet. So don't think that you're the only one who's doing it hard. And I feel like even the way that we talk on this podcast, sometimes it's like, oh yeah,
it's great, we're fine.
Yeah, we're fine. Yeah,
that's right. What's going on for people every day, always behind the scenes, you know, there's ups and downs and, you know, all sorts. Don't think what you see is actually reality, for sure.
Yeah, and what it means to some people too.
Yeah. And Mel and I have all our ups and downs, and you know through life, and you know, I suppose that's what we're trying to share when we talk about truths. And sometimes it does sound like it's all grand, but just the everyday things that we have to do, you know.
But that's why we do share it too, to get that reality check and say, hey, you know, or ask for help or support.
Yeah. That's right. And just share it with a friend or share it with people around you, because it could be really good for them to chat about it.
It's very unlikely that you're the first person to have experienced or gone through what you're doing. So, and that's where seeking some professional support too is good. You know, just lay it all out there and get some help earlier rather than later. But if it is already later, just start.
Get good people around you.
Yeah. So, I don't know, I know that's kind of leaving on a downer, but it's reality. Money can be shit sometimes. And, the more you can plan for it, the better. The more you can talk about it, the better. And you're not alone.
That's it. We're always around. All right.
See you later.
At The Money Collective, we provide financial wellbeing, premium coaching, mortgage broking and workplace financial wellbeing programs, which we couldn't do without the seamless support of our fabulous team.
If you'd like to find out more, head to themoneycollective.com.au or our socials to take action and engage our services. In our Facebook group, join the conversation and help us break down the taboo around money.
All content in this podcast is for educational purposes only and is general in nature. For tailored personal advice, please seek out a professional.